What's up, everyone? Welcome. I hope you're all doing well. I hope you had all a nice weekend. But that wasn't the case for everyone. As you can see, the news of the day here, it is Pope Francis, who is now dead. He did not have a nice weekend. On Easter weekend, or just after, I guess, this morning, Pope Francis has passed away at the tender age of 88 years old. And the Vatican, of course, coming out with this news. It is the major news today. And one thing that you will notice that was quite interesting is that yesterday we had the Vice President J.D. Vance saying, "Today I met with the Holy Father, Pope Francis. I'm grateful for invitation to meet and I pray for his good health." So there you have it, J.D. Vance praying for your good health. The next day you are dead. And of course, J.D. Vance had nothing to do, but it is kind of ironic that J.D. Vance wishes you good health and the next day you pass away after he has prayed for you. And, all over Pope Francis, if you look at the popes, he has been a terrible pope. I don't think a lot of people are going to regret him. And the popes overall, over the last decades, I guess, have been terrible. Of course, before Pope Francis, it was Ratzinger, who was equal, maybe not equally, just a little less awful, but awful altogether. And before that, it was, of course, John Paul II. John Paul II, who had essentially been a prop from the US and the CIA to make communism fall. And ever since, I guess, the Vatican has really been a political tool that has been used by the West to, push their agenda forward. And this Pope Francis, of course, he was not different at all, pushing all kinds of agendas that were sort of the mainstream agendas, and perhaps you could even call it the woke agenda, which is very, very strange, of course, when you consider this is the Catholic Church and Pope Francis was pushing for things like LGBT and, of course, all kind of wokeism and inclusivity. And overall, this guy really pushed for the destruction of Christian values. Of course, he was also pro-abortion. And he not only pushed for the destruction of Christian values, he also, of course, pushed for the destruction of Europe itself and European culture. And as such, he is not someone that will be missed. But that's not the only news today. And of course, the next one is, it sort of goes hand in hand. Pope Francis dying, one of course, the purveyors of wokeism, woke ideology in the Christian church. And at the same time, you have the World Economic Forum founder and chairman Klaus Schwab, another one of the puppets pushing for this spreading of ideology, woke ideology. He also resigns today. So, I guess a lot of good news this weekend. And, I guess J.D. Vance did not pray for his good health, so he can just retire effective immediately. But sort of going in the same way as in terms of ideology as Pope Francis, the ideology that Klaus Schwab has pushed for several decades now ends up being an absolute fiasco, a disaster for him. And, they pushed so hard into this ideology. And at some point, perhaps several years ago, I guess until the arrival of their arch enemy, Donald Trump, they thought, okay, we have this in the bag. We are pushing Western society, European society, and Christian society towards this kind of a bureaucratic hell and a technocratic control of society, using technology to micromanage every single aspect of people's lives and to force them into something that is totally different from the culture that they had, into this sort of new age idea of technological control and, completely getting rid of previous values, religious values, Christian values, and embracing this new ideology that you can call woke or mainstream or whatever you want to call it. But essentially, a destruction of the values that made the Western world successful into a new age with absolutely no values, and it turned out to be an absolute disaster. And today, Klaus Schwab resigning is sort of an admission of the powerlessness that this movement is facing. They have completely lost sort of the mainstream public opinion. Their ideas actually are not only being rejected, but now they're so unpopular that it looks like going forward, all the ideas that they had about technology and how they could control society is not going to happen. It's going to be very, very difficult for them to recover from this, because they have actually done so much damage to their own ideology, to their own vision of society, with the way they try to enact this totalitarian control of people's lives, that now it seems that they have absolutely no shot at getting back on track to where they wanted to bring society. And, as such, Klaus Schwab resigning is, it's absolutely, the symptom of where they are at the World Economic Forum. They have completely lost it. They have completely lost the public opinion. And it seems very unlikely that they will be able to recover. They will have to make themselves forgotten for a while to be able to sort of come back out of the woodwork a few years from now, perhaps at the next presidential election in the United States. And so maybe for the next 2-3 years, we're not going to hear a lot about them. They're going to make themselves very small, and eventually they'll come out with a new leader for the World Economic Forum, someone that you don't know, but that embraces all the ideas that they want, and someone who for sure will be, the right person. It will be a person with the right identity, the right credentials for people to say, oh, this is such a great person, and then for them to try to push the same agenda that was rejected by absolutely everyone. And we will see whether they succeed or not, but considering how things have developed over the last few years, it seems very unlikely that they're going to be able to do this sort of 180 and convince people that now, we should follow them after everything that has happened over the last few years and how much people really hate them now. So let's move on here. One of the news here, we had a lot of news, of course, with the Democratic senator going to El Salvador to rescue the Salvadorian MS-13 gang member. And one of the news that did not make it to the mainstream, but that I thought was quite interesting, is this one. Judge Juan Caño busted with a Tren de Aragua gang member staying in his house. So, they're always saying like, oh, well, the Democrats absolutely want to bring those people, in America, but they will never take one of them in their house. Well, actually, Judge Caño here, he actually put his money where his mouth is, and he actually got a gang member living and staying in his house. How incredible is that? I'm not sure that this is what's going to make these guys win election. But, quite an incredible news here. And of course, you will not see that anywhere in the media. So let's move on here now to what we are about, of course, in this program. It is money time after all. And Mohamed El-Erian, one of the people we, of course, follow, Mohamed El-Erian, a very, very knowledgeable, someone we see on TV very often, noting here that the yield on the 10-year treasury is back above 4.4 this morning, up 8 basis points. This as the dollar weakens, defying again historical correlation. So what does it mean? Interest rates are going back up. The dollar is going down. Usually we see the opposite trend, that when the dollar goes up, interests go down. And now we have them moving, in the opposite direction here, with the dollar going down, interests going up. And this really shows that there is a problem in the plumbing of the financial system. We have people who are dumping bonds. And when I say people, of course, we mean countries, central banks dumping bonds. So the trade war is sort of, facing a sort of blowback. Now the dollar weakening, people selling dollar and dollar assets. And there is a point at which this will cause a problem, of course, because we know there is a $9 trillion of debt that needs to be refinanced by the US government. And if interest rates continue to go up, then it will make the deficit bigger, and it will be harder for the government to actually be able to borrow and sort of make ends meet, right? To lower their deficit, which of course has been one of the priorities of this current administration. So this is, of course, a problem, but we'll have to see, because eventually these central banks, they're going to run out of dollar, and we'll see how it ends up, and if this forces the end of Donald Trump to sort of go back onto his policies and his tariff policies, of course, or not. Because, of course, if Donald Trump is putting tariffs on countries like China are going to try to find a way to get back at him and at the US. And that, of course, is going to include selling dollars, selling US treasuries, and then using the dollars that they get to buy yuan to sort of, fight and, get the best, I guess, that they can in this trade war, and force the US to review their policy when it comes to tariffs. So let's move on here to the next one. And it is a Donald Trump trying to force Jerome Powell here to cut interest rates. And of course, now we just talked about the dollar and how the dollar has been heading lower. And Donald Trump wants rate cuts, so he wants the dollar to be even lower. And there is there's of course a reason for that, because if there is tariffs put on US export also, then lowering the dollar would make those export more competitive abroad. And let's read the message here for Donald Trump that was posted, I guess, on Truth Social. He says, preemptive cuts in interest rates are being called for by many, especially by him. With energy costs way down, food prices, including Biden's egg disaster. So, of course, this egg story, which is really a non-story, but I guess it has taken so much attention from the media. But anyway, he says substantially lower, and most other things trending down, there is virtually no inflation. With these costs trending so nicely downward, just what I predicted they would do, there can almost be no inflation. But there can be a slowing of the economy unless Mr. Too Late, a major loser, lower interest rates now. Europe has already lowered 7 times. Powell has always been too late, except when it came to the election period, when he lowered it in order to help sleepy Joe Biden. Later, Kamala get elected. How did that work out? So, of course, if you've been on the channel following us, we definitely followed that period of time. Jerome Powell playing politics, lowering interest rate just before the election to try to get this boost to Kamala Harris and Joe Biden for the Democrats. And of course, it did not play out well at all. And now Trump wants rates lower. Of course, the economy is slowing down. We, of course, on the channel, we've been talking about this a lot. And it is something that we knew it was coming. We know, and we've been predicting here a recession, and it's actually surprising that this recession has not turned out yet. But we will see if it ends up being the case, or if eventually, Donald Trump manages to avoid a recession. But here we can see in this tweet or Truth Social, whatever post, that there is the blame game is starting. Who is responsible for the slowing down? Who is responsible for the egg price disaster, the inflation? And now Donald Trump wants their own power to lower rates. And of course, the economy has slowed down a lot. And, the economic numbers that were used sort of during the election and around the end of Joe Biden's tenure as the president, they really were doctor number, and every single revisions always came, a few months later, and then they were like, okay, the job numbers, they were revised downwards, the job openings, they're revised downward, everything was revised down all the time. And it really sort of, puts doubt in terms of what the economic numbers coming out of the government, are they credible? And the answer, over the last year, it has been no. And so, as Trump mentions here in this tweet, Europe has lowered rates earlier this week or last week. And, they already know that we're heading toward a recession, and the U.S. has not cut yet. And the U.S., they have this sort of thing. They're always sort of late to the party. They act last. And by acting last, I guess they will be able to bring some capital to the United States, because if interest rates in the United States are higher, then there's more of an incentive to be putting your money into US bonds rather than European bonds. And then when the recession is going to hit, everybody's going to drop rates to zero, and then that capital will already be in the US. And perhaps this is what they're doing, or maybe Jerome Powell is just playing politics, and he's trying to hit Trump with a major recession to trying to stop him from enacting his agenda. Anyway, this will be developing, and we will follow what happens here. And in other news, we have now India putting 12% tariffs on steel from China. And this is the beginning of a trend that we're going to see, and we're going to see this happening all over the globe. We're going to see everybody put tariffs on China, because the US tariffs on China, it will stop the flow of goods from China to the US, but those goods, they have to find a market somewhere, they have to go somewhere, and they can't stay inside China because they don't have the market to consume all those goods. So what's going to happen is that all those goods that were destined for the United States, they're going to be flooding other economies, especially the European economy. And my guess is that we're going to see Europe put tariffs on China too. And here we're seeing India putting tariffs on steel from China. And my guess is they're going to be putting tariffs on other stuff. And we're going to have a lot of other countries who are going to be putting tariffs on China, if not to align themselves with the United States, just to protect their domestic economy, because they don't want cheap Chinese goods flooding their economy and putting their people out of work. So now that has been said, let's move on here to the charts. And we will come back to this one a little bit later. This is a Bitcoin, of course. Let's have a look here at the indices. We have the Dow Jones down 2.71, S&P down 2.81, Nasdaq almost down 3%, the DIXY down 1%, the VIX is going up, of course, markets are going down now, so plus 16% here for the VIX, and among all that, we got Bitcoin here up 3.2%. The interest rates here, as you can see, the lower end of the curve, Here, the 2-year is down 1.4, but the 10-year is up almost 1%. And now we're seeing, the long end of the curve here up substantially, 1.45% for the 20-year and about the same for the 30-year. But this is a big move for the long end of the curve. And it means someone is selling massive amounts. We have gold here, as you can see, gold, going over 3,400, gold on an absolute rampage here for several weeks now, ever since the tariffs have been announced. And now that the sort of the rumors and the idea that Donald Trump wants to force the end of Jerome Powell to lower rates, gold is on a rocket ship, and it's not going to stop anytime soon. Or perhaps we'll see if something dramatic happens, then it could be the end of the run. But I think there is still more room to grow for gold, even though we have probably seen most of the move from gold. Of course, pretty much doing a 100% here over the last year or so. Silver, on the other hand, at $32 is not moving, and we're seeing something, I guess, quite similar when it comes to the crypto markets, with Bitcoin on a tear and the rest of the crypto sector being in sort of a slump. Let's have a look at the SPY here, and the SPY still trying to find some basing here at that trend line. And did we go under? Let's have a look here. We are now under this trend line. And so the question is now, are we going to be able to create a higher low here and find some basing to try to get back at least back to the moving averages here? Or are we at the beginning of a descent that will or could go very well much lower here? There will be here some support in that area for sure, around 4,500 for the S&P. But perhaps here we will find some kind of consolidation and make something like this here. If we consolidate around here and try to make perhaps a lower high, and then when that fails, then we will go back down and see where we can find support. We'll have to see how that plays out, but this is not looking very good here for the S&P and the traditional markets in general. Let's have a quick look here at the Nasdaq. The Nasdaq, as you can see here, on a big downtrend. But same thing here. We've seen some pretty steep lows here. Can we find same thing, another higher low here? And then can we break this trend line? And if we do, if there is a breakout here, it will perhaps be a good opportunity to get on a breakout trade here to try to see if we get a lower high, or perhaps even if we can get back all the way up to make new all-time highs. Let's have a look now at Bitcoin, because Bitcoin now is doing quite well and it is being quite resilient. Let's have a look here. Bitcoin at 87, and we saw over the weekend here this big move occurring. Just I guess same thing as gold, as the pressure and the messaging from Donald Trump trying to force Jerome Powell's hand to lower interest rates, and we're seeing perhaps the beginning of a move. This is something that we have expected here. I was expecting perhaps another low here to touch this trend line, but it seems that maybe we're not going to get that, and we're going to be going off to the races, perhaps on Bitcoin here. And this fractal here that you can see, which has played out perfectly ever since the breakout here at 78,000 back in November, just after the election of Donald Trump, and it has played to a T. And this fractal is just a copy of the previous topping pattern of Bitcoin's previous cycle. So, history doesn't necessarily repeat itself, but it rhymes. And as you can see here, it rhymes pretty well, almost to the point where it seems to be repeating itself. Will we go back here to make a marginally higher high, and that might be the end of the bull run? We will see if that turns out to be the case, or if perhaps this is just a fake out and then we go down. But if you were someone who wanted to take a breakout trade here, you have invalidation very, very close here, just a few percentage points, and perhaps it is a good idea. But of course, Bitcoin being so volatile, who knows? Be careful with your trading. So now that we've seen a little bit of what's going on with the markets, maybe let's have a quick look here at Ethereum. As you can see, absolute flush out here. And just a few months ago, just in December, Ethereum was at 4,000 and it is now at 1,600. A massive dump here. How big is that? We went down almost 65% on Ethereum, and this is not a bear market for crypto. This is the type of move that you see when you enter the crypto bear market, but that has not been the case here for Ethereum. So how do you explain really a flush out like that? Well, perhaps Ethereum is not really as popular as it used to be. It is not the dominant altcoin when it comes to trading and trading volume. Perhaps we should have a look here at Solana. And Solana, even though it followed a sort of similar pattern here with an absolutely insane flush here, how big was that? It was also 67%, so about the same. But we see Solana sort of rebounding here, as Bitcoin finds its footing and regaining some of the support levels, whereas Ethereum here absolutely cannot find any support, and it seems to be going down big time. But perhaps here it is around that 1,200 mark, this major support that we could find Ethereum finding some footing, as it was the case previously in the previous bear market. We went down all the way to almost $900. So we're not that far from sort of the lowest low of the bear market. And now in the middle of the bull market, Ethereum, falling like this, it doesn't speak well for the future of this cryptocurrency. Perhaps there is something else that has happened, something in the fundamentals of Ethereum that is wrong. And if you've been looking at sort of crypto Twitter and the Ethereum and crypto communities, then you know how out of favor Ethereum is. Vitalik Buterin, of course, coming with several statements that were, in my mind, not something that was very judicious. At some point, he was saying, "Make communism great again," after the election of Donald Trump, which when you're running a cryptocurrency and you say something like that, it is extremely stupid. And well, I guess communism did not make Ethereum that successful. Perhaps Ethereum will end up like Venezuela. Who knows? And maybe it will be another big L for communism. But anyway, we've seen all this. Now let's move on to the next part of our show, and let's have a look at what the talking heads on TV are saying about the market.
The Department of Justice made their feelings known. The DOJ had strong words about the tech giant, which has been found guilty of having a monopoly in search.
Google uses its market power against the American people. It has control of an extraordinary amount of data about ordinary, everyday Americans. Google has deplatformed conservative speech and put its thumb on the scale politically for years. All of this behavior is downstream from Google's monopoly power over internet search.
In their opening statements, the government focused on 3 key areas for remedy. Their biggest push was arguing for Google to divest from Chrome, saying that Google's dominance in the web browser space is a barrier to entry for other search engines on the web. The DOJ also argued for data sharing and also placing anti-circumvention provisions as part of enforcement, making it sure that Google doesn't find a way around the ruling. Google will appeal the ruling that they hold a monopoly in search, but they can't do that until this trial has been completed.
You know, and this is quite interesting for Google here because this lawsuit, you know, it's an old lawsuit, of course, and it dates from, the previous administration. And under the previous administration, it was the opposite. They went after Google because they were not happy that Google was not doing everything that they wanted and that Google was not pushing the censorship that the Biden administration wanted. And now we have a new administration, and then this same lawsuit is now on a different basis. Now it's, you deplatform conservative voices. So, you know, there is no way to win here for Google or for a lot of these tech companies. They have to just abide by what the government is saying. And it's like, you know, now Google is in trouble because it was doing what the Biden administration wanted. And it was already in trouble with the Biden administration because it wasn't doing enough of what the Biden administration wanted. And so now you see here Google, in this lawsuit. And if the Democrats get in power at the next election, then they will sue Google once again because they did what the government asked them. And it's kind of, there is no way to win here for these tech companies because every time the political tide turns, then they're going to be sued by the government and they're going to be hammered. They cannot win.
Going to Google. And we think about the conservative speech. We talk about formerly, X, formerly known as Twitter at that time, and Facebook and what they did, but Google played a role in it too.
Absolutely. You know, so I Googled Google too powerful. And right now the articles, I'm back to 2012.
Yeah.
This is underscoring like this, how long this debate has gone on. Imagine that, you know, just that's there with 18 years or whatever it is, 13 years. It's amazing. So there's no doubt about it. Listen, there've never been these kind of companies before that have all coexisted at the same time. And their only true competition has been each other, whether they want to intervene on each other's turf. Maybe artificial intelligence will start to change that. I know anecdotally more and more people are saying, hey, I use AI more than Google or as much as Google. But in a traditional sense, it probably is a monopoly. I'm not a big fan of breaking up companies, though, in general, you know, because I always feel like the marketplace does. Businesses, you know, A&P, the supermarket. Most people don't know A&P who are watching probably, but at one point they controlled 70% of all or groceries. They were going to break them up. Now there's like 2 stores left, right? You know,
and Whole Foods came out, and
exactly.
all these other grocers came out.
And you know, or in Walmart, when Walmart it was too big, and then Amazon was going to beat Walmart. Now Walmart's beating Amazon. Sometimes we let them duke it out. It works out pretty good, but it's the tactics to stop competition is where I get concerned. You know, okay, if there's pure competition, fine. Somewhere along the line, Google will get too big to manage. But if they keep, if they buy up all their potential competition or nip them in the butt, they leave themselves vulnerable to some sort of breakup.
So I don't want to speak for you, Brian.
But is this really the question? Is this because Google is a monopoly, or is this because Google is not doing what the government wants? And of course, if Google was doing what the government wants, they would never go after them, even though they have a monopoly. And, to be honest, Google is an absolute monopoly. I don't know how this company can stand the way as it is. It is against antitrust laws. They have, 99.9% of web searches, and, their company, it englobes so many services when it comes to ad and AdSense and online marketing that they are de facto a monopoly, and, they have been let off the hook. When we already have antitrust laws, but nobody went after them because, of course, they contribute so much to the campaign of all the politicians. But now things are changing. And, as I said, there is no way to win for Google here. And perhaps it is some kind of karma, because in the end, they have been preventing competition from existing in the online, search and ad marketing businesses.
Going to repeat itself here, which is why I don't want to see the courts get involved, because then you give all the antitrust zealots precedent to go after other companies for the same reasons if they develop this precedent.
Another angle, Jackie, which I know I'm talking Mark Zuckerberg's book. He said this in the hearing. He said, if you break
Tesla
us
down
up,
6.6,
who can take on
Nvidia,
Alibaba? Who can take on JDD, JD.com, PDD, right? So who can take on China? If we
decent amount, we have seen spreads pick up a bit. I think similar to what's been going on in the equity market, you could argue that some of this obvious risk with which we're dealing tied to the trade war has been reflected, whether it's in credit spreads, whether it's in the near bear market in the case of the S&P at its lows, the bear market in the case of the NASDAQ. But something worse than I think what may be the base case right now, slower growth, but not a recession. I think recession type conditions, were they to unfold, and it's heading in that direction, I think that's not fully priced into any markets, even if some of this uncertainty is priced in. More of a worst case scenario from an economic growth perspective, we're probably not yet seeing that fully priced in.
All right, could be another big week ahead. Lisanne, thank you so much for joining us this Monday. That's Lisanne Saunders with Charles Schwab. Coming up, Google heads to court today as the Justice Department wants to break up its search empire. What's at stake in the 3 weeks?
Oh, that's the big news. They're all about Google. And of course, here Lisanne Saunders, she's not wrong. The market has not priced a recession, but as we were saying, all the economic indicators are saying, oh, there's no recession. So if there's no recession, why would the market price a recession? But we know that a recession is very, very likely to happen, especially if the economic indicators and the economic data compiled by the government has been absolutely bogus. Then if that is the case, then eventually we're going to see a revision at some point of the economic data. And it's going to be a hard pill to swallow for the market, because they will realize too late, oh, we're already in recession and interest rates are high. Powell has not lowered rate. Like if Powell was to lower rates now, it wouldn't even be preventively, It's like it's only preventively if you are taking into account the nonsensical economic data. But if you actually have a look at the economy, and if you use, instead of using CPI, you use something like Trueflation. Trueflation now is at 1.4% measure of inflation, and if that's the case, we're already under the 2% target for the Fed. But the Fed uses CPI, which is a lagging indicator, and now they're saying, oh, we're at 2.5, we're not there yet. Well, the problem is that if you're using the rear view mirror to know which way you have to drive on the highway, then you're gonna crash, and when you crash, it's going to be very bad.
In case you missed it on The Pulse.
It's not the headline-grabbing $15 billion bankruptcy. It's not Lehman Brothers. It's not that. But what is happening underneath the surface is...
And it's interesting. They're showing all the cryptocurrencies here on Bloomberg. And I guess, they want people to feel good about something, because if they showed equities, everything is down massively, several percentage points. But... and of course, there is probably a rotation of capital, something that we also expected, that people seeing that the traditional markets are doing pretty bad, cryptocurrency and Bitcoin having already had that sort of drawdown of, 20 and something percent from the highs. Now, there's only so much that a market can fall. And while now the traditional markets are falling down, capital is rotating into things like Bitcoin and gold. And perhaps this is transitory, you could say, that it is just for now while capital finds a sort of safe haven, and then when the traditional markets will have found their footing, then capital will rotate back away from gold and Bitcoin into the S&P and the Nasdaq. But I guess for now, this is good for the cryptocurrency markets. Let's listen here.
And now for our stock of the hour. Alphabet shares falling amid the broader sell-off. It's also coming, though, as Google's trial beginning today that will determine what charges a judge will order to prevent Google from monopolizing the online search market. The Department of Justice and a number of states have proposed a breakup that would force Google to sell its Chrome browser. Google argues against a forced sale of Chrome and has advanced an alternative proposal. Joining us now with the details is Bloomberg's Sarah Forden, live in Washington, D.C. So the judge in the case, Sarah, already found last August that there is an illegal monopoly here. So what is the best outcome for Google?
So this is a case where they're trying to figure out how to fix the problem. And the government is saying that they want Google to be forced to sell off the Chrome browser. They're saying Chrome is the gateway to the internet, and so it needs to be, run by somebody else to make it a fair playing field for other potential browsers that could come on and actually be competitive. Google is saying that's not appropriate. It doesn't address the harm, and they're proposing a situation where you might have like a drop-down menu of other browsers that you could pick to load on your phone, so that Google would no longer be the default, but it could still, play in this market and still collect revenue from search requests and advertising.
The trial is...
And this is, of course, absolute nonsense. Nobody cares about Google Chrome. And if you remember, back in the days, there was the exact same thing with Microsoft. Microsoft had Internet Explorer, and Internet Explorer came sort of as a default web browser in Windows. And back then also they had exactly the same thing where they said, this is a monopoly that Windows is putting their own browser in their operating system. And now I guess they're doing the same thing with Chrome and Android. And the truth is, today, who uses Internet Explorer? Absolutely nobody. And so, it is kind of a sort of a silly thing here for Google, because there are many, many aspects of Google which make them a monopoly that have nothing to do with their browser. And it's sort of like looking at the shrub and completely forgetting about the forest here. Google has an absolute monopoly here on the ads, online ads, and they're not going to address that, because if they were to address that, and if they were to actually look into how Google has created a marketing monopoly with online ads, then they would have to do something about it. And if they did that, it would break Google. It would destroy them. So they're looking at the Chrome browser, which is nonsensical, and that really doesn't matter, because if Google was to sort of lose Chrome or have to divest from Chrome and spin it into an independent company, then it really wouldn't affect them that much. But if they did the same thing with like AdSense, then it would be really like, splitting Google in half, and a major part of their revenue would then be diverted from the company, and the stock price would definitely tank on news like that. Nvidia here catching a beating, and Nvidia has been down now for a while. Let's see, Amazon down 3.4%. Everything is down here in the Nasdaq, S&P, and this is a pretty big down day, and I guess the market is not necessarily liking the interference, I guess you could say, of Donald Trump with the Fed policy. But at the same time, pretending that the Fed is the independent organization that it pretends to be is absolutely laughable, especially when you consider how they have been playing politics over the last year and the last election.
context changes everything.
In case you missed it, on Bloomberg Surveillance.
I worry less about AI taking my job. I worry more about someone who uses AI really well taking my job. AI is still not going to have the human instinct and the judgment that you're going to need to have. You're still going to need to do oversight. There's a human in the loop, but now that developer is going to have a companion. And so what AI will allow us to do is not just go do things that humans don't do as well, but actually do things that humans don't have the time to get done.
Don't miss Bloomberg Surveillance live every weekday.
Scheduled for weeks now, meaning that the meeting itself predates the tariffs that were put in place on April 2nd. But of course, tariffs being top of mind for all 4 of these companies. We do expect there to be a readout after this meeting takes place. Some of these officials are expected to be CEOs of the companies. Some might be other top representatives. For now, what we know, Scott, is that 4 top officials, Home Depot, Lowe's, Walmart, and Target, all of them will be at the White House today, later this afternoon, meeting with the president. Scott.
Megan, thank you. That's Megan Casella at the White House. Up next, we have more of the day's biggest movers right after this.
And it's going to be a tough meeting for those guys, of course, because all those companies, they are massively stocking products from China. And in the last video, we had sort of this infographic that showed, the amount of goods from China that all these companies were getting. And it's like, 60, 70, 80% of the stuff that's in, Walmart, Target, Home Depot, Lowe's comes from China. And now with tariffs as they are, we're talking about 245% tariffs on some goods and 145 on, other. Well, their business is done. There is no way for them to survive. At least in the short term, they're going to have disastrous results until they can manage to move the supply chains somewhere else. And there is not a lot of somewhere else right now, because tariffs, even though on other countries the tariffs are not as high necessarily as they are on China, but there's still tariffs going on everywhere. So no matter what, there is going to be a hit here to the bottom line of all these companies. And the question is going to be, what are they going to do? Are they going to go to the White House today? And are they going to beg Donald Trump to get some tariff exemptions for the stuff that they're selling? And the question is then, is Trump going to accept that? Or is he going to demand something in exchange? We'll have to see, and we'll have to follow exactly how that develops to see what are the consequences here of the tariffs for these companies, and perhaps of the negotiation, or at least the meeting that is going to take place now at the White House in regards to that. Let's go quickly back on Bloomberg here while we wait for the commercial here to end.
Not to mention these Southeast Asian countries who have higher rates as well, questions about transshipment, et cetera. These are a lot of issues to untangle, and so it's unclear where this is going to end up as a result of this meeting.
Curious, Jordan, in the past, is there anything that these types of corporate representatives can offer Donald Trump? I mean, they're not manufacturing, right? They're retailing to U.S. consumers. So what do they have in terms of leverage, or in terms of something, a carrot to give him or something like that?
Nothing.
I mean, in one sense, they have the U.S. economy, right? The president, it's in his political interest to have the economy humming, and this is a consumer-based economy. And so if they go to him with evidence or projections that these tariffs can really cause a slowdown, if not a recession, later in the year, perhaps pointing to earnings projections they have in their data, that could sober up the president, perhaps. I mean, it's a strategy that Treasury Secretary Scott Bessent has used in other aides when they're pointing to things like the bond markets as far as points of pain for the president when it comes to the tariffs.
And here I think that he's pretty wrong. And we covered here on our video on the channel a video that was called "Why Trump Doesn't Fear a Recession." Why does he care about a recession now? not only is a recession, as we've said now, it's inevitable, and it's been inevitable for at least a couple of years now, because of the spending that was done by the government under the Biden administration, because he tapped out the bond market, he destroyed the treasury, spent 10 years worth of money of the US government in a single administration, and that's how he managed to prop the economy and not have a recession under his watch. But the consequence is that the next administration was going to be settled with the recession that should have happened under Joe Biden. And so if a recession is inevitable and Donald Trump is going to have a recession, then why does he need to make this recession a drag to trying to postpone it as long as possible, instead of making it happen fast, quickly, and then still try to put the blame on the previous administration and then say, okay, now the recovery is actually my policy. And of course, this is a much better situation for him. Instead of, try to time out this recession, to take time and try to avoid it. If in the end it is going to happen, then it's better that it happens early into his presidency, that it happens a year from now. And then in the last 6 months, the campaign for the midterms, you are in the middle of a recession, and then it's an absolute wipeout in the midterms election. So, of course, in terms of political strategy, it's much better for Trump to make it happen early, to make it happen now, just a couple of months into his presidency, and then the blame can sort of be shared between him and Biden. And of course, the tariffs, the imposition of these drastic tariffs, they are a catalyst that will bring this recession forward. And of course, then the question will be about the rebound. If Donald Trump and the Republicans can get the tax cuts passed in the House and the Senate before the recession, then the rebound could be absolutely staggering, because if they are able to enact, these tax cuts, and at the same time there is a global slowdown, a global recession, and then you have tariffs on top of tax cuts, then all the companies in the world are going to have only one choice, and that will be to come to America to take advantage of the US consumer market, to avoid tariffs, and to take advantage of the lower taxes. And if he does that, then the US will rebound from the global recession stronger than any other economy, and then he's going to have something to stand on in terms of political achievement, political track record when it comes to the midterms. But if he just waits to try to stop and avert this recession, then what's going to happen is that he will get the recession, and it will be all on his hands, even though he's not the one who created it. And there's absolutely no political points to be won in that scenario for him.
After the chair of the NEC, Kevin Hassett, on Friday suggested the administration is looking into whether it has the...
All right, let's go to CNBC. They're talking about crypto.
Just a week and a half or 2 weeks ago.
Real quick, last thought?
I think one of the hardest things for investors is to wrap their heads around the fact that day to day it does trade like a risk asset, but medium long term it trades like a safe haven. If you look at gold's outperformance, that kind of can act as an indicator of where Bitcoin heads when the dust kind of settles.
Appreciate the update. Thank you. Tanay McKeel. Belsky, what's your final trade?
Take two. I'm going to play Weiss in Grand Theft Auto.
All right, Amy.
Franco, I spoke about it earlier.
Weiss.
Short Belsky, long the 10-year.
All right. Joe T.
Amgen.
You guys will make up later. That's how this always goes. That's how this always goes.
And Belsky always with the stupid ideas. Take two. This is probably one of the worst things that you can do, considering how Everything has been going very, very badly in terms of entertainment here. We've had major, and especially in the gaming industry, when you look at, Ubisoft and their latest Assassin's Creed, latest AAA game where they spend, how many untold hundreds of millions of dollars to develop this game, and it has been an absolute disaster. Same thing for Disney and Snow White, and now Grand Theft Auto, and of course Grand Theft Auto, is going to be a major game, but will it be the success that Take-Two is going to need to be able to make some money? Because they have spent several $billion now to make this game, and if it is not a stellar success, then the company is going to be in big trouble. All these entertainment companies, that whether they make games or whether they make movies, they're now spending so much money ahead to try to create these games, and then they're making terrible games with games really that the public don't want, the opposite of what the public wants, with this idea that we can force the public to change their mind about what they like and what they don't like, and we can push our ideology, we can push our narrative, we can push our agenda onto the public, into the entertainment that they like, and force them to embrace our ideology. And we saw with Snow White how that backfired. Snow White was a movie that it would have been a success if they had just done a basic remake. It didn't need to be a good movie. It didn't need to have anything special. But they went out of their way to make a movie that deeply upset most of the population. And it became an abysmal failure. And they're going to lose so much money, Disney, on Snow White. And Belsky, of course, saying, Grand Theft Auto. Well, there's a chance that Grand Theft Auto also goes exactly the same way. And if it is not a success, with the billions of dollars that they spent to create the game, this is going to hurt Take-Two so bad. And it's not surprising that on CNBC, he would say, this is what you got to buy now. The upside has already been digested, and now you're left with all the risk if you buy Take-Two now, just like 6 months or 8 months before the release of the game.
Is that right?
Exactly. Each, investing is the art of the specific, and we're trying to look through at individual businesses. And we've been in a market that's been based on indexes, themes, people swinging in and out based on momentum. I think we're in a big return to really selectivity. And I think that's why we may actually see a sort of a boom in active management again. It's been sort of the whipping horse for so long relative to passive indexes, but those indexes got very concentrated, very narrow, and very richly valued. So I think you're seeing a move back to active in general, and then within active, this real selectivity to be able to look at the Mag 7 and try to pick the 3 that are the best positioned to look at 500 companies in an index and pick maybe the 5% or 10% that have the resiliency and durability to get through these tumultuous times.
Yeah, and lest anyone think because of our recent conversations that you're a tech specialist, far from it. These names have kind of fallen into your lap as you're looking across the markets for value and growth. You've got some financials in here. You've got Capital One and U.S. Bank. You've got some healthcare names, Humana and CVS. Let me just take a step back, Chris, and ask, what do you think is going on with the market here? And do you need to have kind of a grand theory of everything? Or are you kind of just keeping your head down and looking for stock-by-stock opportunities?
Well, I think the grand theory you have to have is that we came into this year with 3 massive transitions happening at the same time. So you had a transition from a decade or almost 15 years of free money, zero interest rates, magical thinking, modern monetary theory, deficits don't matter, money is free, valuations, endless liquidity. So you have a transition from that to a normal interest rate environment. You have a transition in 30 or 40 years of globalization into deglobalization, rising nationalism, geopolitical force. And then you have this massive transition transition happening because of the advent of this incredible technology in AI. So you have three big areas of transition. And then on the other side, you had transition married to complacency. You had the market at very...
And basically what he's saying is that you're going from the world of fantasy back to the real world. And for the last several years, for the last, maybe 2-3 years, ever since 2022, the market has been juiced up on nonsense, on interest rates that were way too low. And when the correction had to happen, then it hurt everybody so bad. But no one really has reverted back to a sort of mentality of the real world and reality. People, ever since the 2008 and 2009 crisis, we've had, as this guy was saying, essentially free money and, a printing of money that is unprecedented. And people have gotten used to that. And now we're at the beginning of a period where this is over, but the market has not realized yet this is over. People think that the Fed still has their back. People still think that the Fed is going to come and save this market, and the money printing will go back. And perhaps it will eventually, but the pain point at which this will happen is probably much, much lower than what it is here. And people are perhaps not ready to actually stomach the drop up to that point. And, who knows where that point is, but we were looking at the charts earlier. Before 4,500, this doesn't exist. At 4,500, perhaps Jerome Powell gives you, a cut. But interest rates are not going to zero because the S&P goes to 4,500. And, it will be much, much, much lower that you can get back to this old paradigm of interest rates, near zero. And when it does, the damage to the economy will be such that nobody is going to be thinking about investing in the stock market when that happens. But, what this guy is saying essentially is he's not totally wrong, but of course, it's like if you've been living a dream for the last 10 years, if you've been living in fantasy, then the return to reality is going to hurt a lot. And, in many ways, gold, as you can see, has been ripping higher for a long time. And of course, in part due to, geopolitical instability and central banks trying to de-dollarize. But people are so regular people, retail, are so under allocated in gold that when the house of cards comes tumbling down, they're going to realize, oh, yeah, I should have had more gold in my portfolio. And perhaps gold will go down as it did in 2008, but it will not go down as fast and as strong as all the other risk assets, especially the stock market and real estate. And that's where people have most of their money. And what we're going to see a reverse wealth effect when these assets get hit hard. Then people will not have any money to spend, and they won't be able to, pull money out of the stock market to even buy the things that they want. And the depression, or I guess it will be perhaps more than a recession. If it is a depression, well, it is like in the 1930s. That was what happened. Everybody was, high on the stock market, making, these insane gains. And then when it stopped, then eventually people realized, oh, this economy was built on stock market speculation. It wasn't really built on real companies making real goods and a real economy. It was just, fugazi and monopoly money. And I think we're not there yet. We're not there at that point. I think there is still a little bit of life left in the everything bubble, the speculative market of all assets. But eventually, we are going to come to this point, and when it does, then the downfall is going to hurt a lot of people and hurt them really bad. So let's move on now. As we reach the end of our show, let's move on to the news and see what they're saying here on Fox.
It follows certain steps along the way.
Okay, Alito said in his dissent with Justice Thomas over the weekend that you acted without hearing from the government. So we'll see where that goes. I know this is stepping outside the legal bounds. It's more a political question. But Mo Alithi, who used to work with us here at Fox, has a warning for Democrats on it.
Both sides have kind of gone to their corners and are saying this is the fight we want to have. Whereas I don't necessarily know it's the conversation that would actually resonate with the rest of the country. We don't know all of the details about this guy. So let's not make him a martyr.
So Alexandra just referred to them. There are 4 Democrats heading for El Salvador today. Maxwell Frost out of Florida, Robert Garcia out of California, and then on the list of Maxine Dexter of Oregon. What do you think about the possibility of making him a martyr?
Yeah, it really is a puzzling political strategy. And talking about, Chris Van Hollen's visit last week, I thought it was very interesting when he came back this week and was explaining himself on the news shows. And he just basically gave sort of a generic, perfunctory, condolence for Rachel Morin. And it doesn't seem like he has any concern for her and doesn't recognize that Rachel Morin's death was directly or at least indirectly related to the Biden open border policies, which were unconscionable and had no regard for the interests of Americans. So I do find it very interesting because he says he's fighting for due process, but the Democrats have fought every step of the way against any deportation, against Trent Aragua, against this man, against anyone. It seems like their only position is people that entered here illegally should get to stay under almost any circumstances without regard for the interest of the American people, their safety, or national security.
Jonathan, thanks for coming on. John and Faye, we'll cool our jets until that comes back. Appreciate your insight today. Many thanks to you. Jackie, you work at the White House. It has pretty much said that it will stay the course. What do you pick up on that side of the story?
Yeah, I think for now, Bill, the White House really likes the sort of political contours of this conversation and the footing that it's on, the narrative that they can keep on with is there was no vetting on the way in, but you want to do all this vetting on the way out. At the same time, I did see maybe some smoke signals from Tom Homan's comments that perhaps there's something in the works to undo sort of the underpinning of this conversation around Kilmar Abrego Garcia by, revoking the withholding for removal by talking about the gang conditions in El Salvador that no longer exist, sort of the premise of why he was granted that protection from removal to his home country. So certainly more to come on this one, Bill.
You got it. Okay. And we will follow your lead when that happens.
And this is an absolutely stupid hill for the Democrats to die on. They've decided, without any idea as to who this guy is, to, they've decided to go full force defending this Salvadoran national who's been deported to El Salvador, his country of origin, and, pretending that this is like something very, very important and that due process and human rights and all that stuff. When they were not able to even defend American citizens imprisoned in other countries like Venezuela. You're talking about real American citizens who were imprisoned in Venezuela and in Russia. And the Democrats never did anything. They never went to visit Venezuela or Russia to try to talk to these American citizens. And now you have an illegal immigrant from El Salvador, member of a cartel, MS-13, designed as a terrorist organization. And now they're going out of their way to try to go there. And who knows what they want, Of course, they're doing this just for show. They're doing this for the media attention because they're hoping, it's going to put my name out there and it's going to do very well for me at the next election cycle. And perhaps it will work for them in terms of Democratic primaries because, well, their name will be out there. They will get some airtime on TV. But when it's going to come to the general election, they're going to have to defend themselves for doing that while not defending American citizens unjustly imprisoned in other countries. And they're going to have a very, very hard time, especially that they are doing that now without having done the background research on this guy. Because if they had actually done the background research, then they would know that this guy, he is not someone that you should be going out of your way to defend. Because when it comes to deportation, he's probably a prime candidate for deportation, being a member of MS-13, and considering that he was arrested initially on suspicion of human trafficking. And this is the guy that the Democrats have decided to bet their political career on. And, you know, perhaps you could say, oh, well, it's only, you know, Senator Van Hollen and now whatever his name, Maxwell Frost, the new rookie congressman, and a few other that are putting their name out there. It's only 4 or 5 of them. Well, it doesn't matter, because at the end of the day, if everything about this guy is confirmed, the narrative that will be happening when we come to the next election is going to be the Democrats want cartel members return to America after Donald Trump has deported them to try to make America safe. And there is no coming back from a narrative like that. It won't matter even if there is a massive recession that happens and it's all on the lap of Donald Trump and he's facing an economic catastrophe. Then the choice for America will be, well, you can have either Donald Trump, who makes terrible economic decision that hurts your wallet, or you can have the Democrats that are going to bring MS-13 gang members to your neighborhood. And if that is the choice that Americans are faced with, then I think the choice is going to be quite easily made. It's better to hurt your pockets than to hurt you physically. Anyway, guys, this is it for today. Thank you for watching this video. Don't forget to subscribe and to leave a like if you haven't done so. We will, of course, keep an eye as to what happens here with the meetings with the major retailers at the White House, and whether some kind of compromise is going to be found between these retailers and the Trump administration when it comes to maybe some tariff exemption. So yes, don't forget to subscribe to the channel, and I will see you all on the next one. Thank you for watching.
Hit me with that like, and sub to the channel. Hit me with that like, and click the effing bell. Click that bit, alright. The algo recommends, for sure you gon' like. The algo knows you well. Hit me with that like, subscribe to the channel. Hit me with that like, and click the effing bell.